Hi, everybody. Welcome from the American College of Financial Services. Thank you for joining us. This is the American College Center for Women. Happy to be presenting Retirement Income Literacy for Women Perspectives and Opportunities. I'm Hilary Fiorella, the Executive Director at the Center for Women at the American College of Financial Services. Today, I'm joined by two very accomplished women. Our first panelist, Angela Ribuffo, graduated from high school at 16 and then San Francisco State University with a bachelor's degree in nursing and a minor in theater arts, and was then commissioned through the Air Force ROTC program, where she was the first distinguished graduate. Like a lot of us in the industry, Angie's path to financial services was not direct. After graduating and her time in the Air Force, she went on to teach in Germany. She consulted to the US Department of Defense, and then in 2008, became an independent financial advisor, which leads us to where she is now. She has licenses in life and health, security licenses in Series 6, 63, and 65, and holds 5 designations. So she has the CFP, ChFC, RICP, CDFA, and CLTC, 3 of which I'm happy to say are from the American College. Angie's business, Raion Financial Strategies, is located in Anchorage, Alaska. She's been published multiple times in industry and mainstream publications, has been bestowed with several awards, and is passionate about promoting women in financial services, financial planning, and breast cancer awareness. Thank you, Angie, for joining us today. So Angie will be presenting the practitioner's viewpoint today. Sandy McCarthy is President, Retirement Services for OneAmerica, offering defined contribution and defined benefit services. Sandy has more than 30 years industry experience, including key leadership roles at Mercer, ING, which is now Voya, and City Street. Her educational background was not your typical path to financial services either. Sandy graduated with honors from Tufts University, earning both her undergraduate in sociology and education, and got her Master of Arts degree in education, and then completed an MBA from the Fuqua School of Business at Duke University. Before working at OneAmerica, Sandy spent 7 years in leadership as a senior partner at Mercer, following an international position as CEO and board member of their Asia Pacific outsourcing business in Melbourne, Australia. She also held leadership positions at Fidelity, Bank of America, and State Street. She too has been recognized as a woman of influence, in her case by a leading business journal. We are presenting this research as a baseline to address the gender bias in advice. Rather than suggesting this information is applicable to all women, we're suggesting that the research is a tool to broaden discussion and awareness around this widely varied position and circumstances of female consumers. We hope this discussion and others will lead to best practices for the underserved women's marketplace in financial services. There is no one-size-that-fits-all approach in financial services, and we hope this conversation helps you as you address those needs and opportunities. So now on to the research. 821 women and 688 men were surveyed. The only time you'll ever hear women outnumbering men in financial services, I think. So the quiz consisted of 38 questions on retirement planning, retirement income planning, medical and long-term, life insurance, risk tolerance, and investing. And a passing grade was considered getting more than 60% of all the questions correct. So here is the punchline and the reason that we're all talking today. 72% of the men failed the test. 89% of women failed the test. And that raises the challenges and opportunities with respect to women and environment. So literacy scores were lowest for women under 65 with assets between $100,000 and $500,000. Nearly 2 in 3 women versus 3 in 4 men say they've already tried to figure out how much they think they'll need in retirement. And it's concerning to us that only 66% of women versus 75% of men think it's important to even figure this out. And as a side note, men claim to have higher levels of knowledge and then test poorly, whereas women's self-reported knowledge is about aligned with their actual literacy scores. So they're a little bit more self-aware about what they don't know. But I think that this is a great starting point to start the conversation. And we'll hear from Angie first about whether or not that's what you have experienced, Angie, in your practice with women having a plan, knowing what they need to save, or even are self-aware.
Thanks, Hilary. Thanks for having me here today. And I'm really excited to have this conversation with you, Sandy, and all of the participants that are on the webcast today. So yes, I found in my experience that women do self-report that they don't know what they don't know. So that is true. It is also true that men come into the conversation sometimes thinking that they know more than they know. But during the course of the conversation, a lot of times men will at some point acquiesce and say, yeah, I didn't know that. So that is good from a practitioner standpoint. I think the challenge that we have is that there is so much going on in our industry, from services to products, that it is hard, I think, even for practitioners like myself to keep up with what's going on in the industry as far as products are concerned. And then the services, I mean, there are terms out there that we have to acknowledge that we don't necessarily agree upon. I mean, what's fee-based? What's hybrid? What are all of these different services that are out there? So when you're talking to a client, yeah, they come in and they're like, glazed over if you start talking about things without level setting, basically what you're talking about in definition of terms. So without doing that, I think you're already starting behind the power curve if you assume that clients understand what it is you're talking about.
I think that's a great point in terms of level setting and having a common understanding of where you're starting. That's a great point, Angie. Sandy, can you talk about the tools OneAmerica uses to understand the marketplace?
Sure, happy to do that, Hilary. And Angie, I agree completely, right? The terminology is confusing in itself, and it is a complex topic. One of the things I would say is we start out with thinking about how do you plan, whether you're male or female. And as I think about it, and again, just by way of introduction, Hilary mentioned that I work at OneAmerica. The type of clients I work through are advisors and the plan sponsor. So it isn't about connecting with every individual. It really is about going through the retirement plan. And we will work with plan sponsors and advisors to understand how can we work with the individual specifically. So what we look at is targeted information. So if we identify that a retirement planning process is critical to the conversation, we will go out and target, say in this case, female employees, and say, look, let's complete a financial plan, a retirement planning module. And we have a tool, OneCheck online, that I think is quite remarkable in helping people to get to that common language. So part of the process is getting them to understand how do they navigate that terminology. Step one is providing personal information, things like age, salary, when do I want to retire, walking through the tool. And again, it's interactive. So throughout the process, there are education modules as well as calculators. So you go through the module providing assets that you currently have, as well as those that you earmark for retirement. And you get to a place where it identifies your goal. How much do I want to have in retirement? What type of income am I looking for? And along with that, making assumptions. So what do I think my salary growth will be? How much do I want to leave in legacy? What am I thinking about in terms of accessing Social Security? So simplistic questions where you can find educational information. And from that is an action plan. And in the action plan, it identifies whether or not you will be able to retire. Is there a shortfall? And what might you consider for your goals? So is it increasing contributions? Is it looking at your retirement age a little bit differently? Social Security, right? We saw that the Boston College Research Center says women, so if we're talking about women today, have about, on average, 80% of what men have in retirement for Social Security. So it certainly is something to keep our eye on, and we'll continue to use that tool as a way to have an interactive module for individuals.
Sandy, that's consistent with what the study said. So the study indicated that women's approach to financial and retirement planning differs from men, but it also differs, and again, at the outset, I said this is not one size fits all. So it differs by age, asset level, and racial and ethnic backgrounds. So Angie, how are practitioners approaching the opportunity? Do you have different approaches for your clients based on either gender or age?
For both, actually. And let's not forget cultural. So everybody looks at things through a different lens from a cultural perspective as well, whether it's a matriarchal or patriarchal background. I always say that everyone comes with a money story. So we have to figure out what their money story is. And so that speaks to gender, that speaks to age, right? Because if you are a young person coming in, then your reference point maybe it's 2008 as far as something that happened in the marketplace. It could just be March of 2020 in the pandemic. But if you are older, if you are looking at 65 and older, then we are looking at many, many, many different periods of time in the investment world where the market didn't do exactly what we thought was going to go on. And so again, we come from a different perspective. So taking that into account and having that conversation, I think from the very beginning, is asking the question, what keeps you up at night? What's your major concern and what brought you here today? Because typically there is a reason why someone shows up at the doorstep. It's not like they had this epiphany. They didn't get up this morning and say, gee, I think I'll go find a financial advisor and have a conversation. It doesn't usually happen like that. It's usually there is some major effect that happens, some major event, whether it was with a friend, a family member, the pandemic, it really doesn't matter. But finding out what the key was that brought them is pivotal, I think, in having the start of a conversation.
Yeah, I love the concept of what is your money story. Sandy, do you have anything that you want to talk about the different approaches?
I'm going to just jump off a little bit in terms of what Angie said. What's that moment, right? And one of the ways that we think about it is really connecting with the individual where they are at that moment. And it goes even beyond just maybe an event. It goes into the idea and the notion of a persona. And we build off of what is uniquely happening in that individual's life. So based on a life event. At OneAmerica, what we're looking at is, and this is again, an illustration. So meet Jessica, right? Age 38, has a 401k balance. So Angie, again, to your point, what is happening in that individual's life at this moment? So there's motivations, there's challenges, there's the pain points that we describe. And then based on where they are at that moment, what are some of the possible solutions? So again, going back to, this is a complex topic, let's use the building block approach. And where are they so that they continue to follow a journey that's going to help them to get to where they need to ultimately be. So here we have motivation, supporting a family, building a retirement. Sounds familiar, right? Paying a mortgage, enhancing my career, lots of things going on. So if you look to the right, what are the possible solutions? Well, create a budget. That sounds so basic, but honestly, even through the COVID, we saw that individuals were asking for, how do I plan? How do I plan for my future? And budgeting was one of the solutions that really resonated with individuals. Protection planning, right? So now you have children thinking about how might I protect my family through life insurance and some other vehicles that you surveyed within the study that you just completed, and then starting a 529 plan. So again, at the bottom of this illustration is some of the mechanisms, whether they're video, podcast, calculators, you've got to meet individuals where they are. And where they are might be online, it could be by web, it could be in person, and a whole host of ways that you might connect. So the motivation is really important in terms of getting them to that next level. And if you understand that, so if you think about Jessica at age 38, somebody at a younger age might be experiencing these same kinds of motivations. And so it's really important for you to connect with the individual where they are.
I love the personas as a guidepost. So now we're going to talk about one of the myths about women. And everybody says that women are more conservative. The survey validated that and said that half of women rate their investment risk tolerance as conservative versus 3 out of 10 men. So we're a little more conservative than men. And women over 65, as they get a little bit older and gain more assets over $500,000, they tend to be more conservative. That's what the study said. Does that make sense to you, Angie? Does that track with your experience?
It does, Hilary. And it's interesting because they come in and they take that risk tolerance questionnaire, whichever one it is, it really doesn't matter. And they come out being conservative. And in the course of conversation, right, we have to define what conservative is. And I say to my clients all the time, my definition of conservative and your definition of conservative can be 2 totally different things. So let's talk about what that means to you. I also find that during the course of my relationship with that client, they may move in risk tolerance from where they started. Some come in being conservative because they don't know what they don't know. So I'm going to be conservative, right? Because I don't know what I don't know. And we've already established that women self-report. So if I'm self-reporting that I don't know what I don't know, then I'm going to be very cautious about everything that I do with my money because I'm fearful, right? But the minute that they start to learn about products, services, how they can control their environment. To Sandy's point, budgeting, right? My clients a lot of times say budgeting is a B word, it's a bad word. You know, you want me to budget. But when we start talking about their standard of living and how important that is to identify what that is, right? If we're looking at how much money do you need in retirement, then we have to figure out what that is. So over the course of time, I have found that clients will move in tolerance based on knowledge and experience, based on life events. They can be incredibly aggressive in the beginning, suddenly have a family, have a baby, and move to being conservative because now it's not just them. So they've got to be conservative in their thought process. So yeah, it is true they start out conservative and then they can move through that risk tolerance life cycle.
And Angie, Sandy talked about how COVID has impacted in the persona case, Jessica. So how has COVID impacted how you approach women's risk tolerance and where they need to be? Has it changed anything for the women that you serve?
It hasn't really changed it from a risk perspective as much as it has in solutions. Sandy talked about the fact that we need to look at asset protection, family protection, risk management. And from that perspective, they've come in because all of a sudden those things have come to the surface more than anything else when they're looking at family and friends who are affected.
Okay. Sandy, does the risk tolerance for women, does that track with your personas or do any of those?
So again, you know, we work through the plan sponsor and advisors. And so part of what we're looking at is what's the demographic look like? What's the population in the retirement plan looking like? And I'm not going to conclude, I would trust Angie's judgment in terms of where she is on the conservative side for women. But what we would look to do is say, how do we want to connect with the individual? What's important? And in that scenario, it would be, how do we want to educate them on the topic of investments? Where do they sit? How can we bring them along that journey again? I would say from my experience, I see there's kind of two camps, right? Individuals who want to do it themselves, and then those individuals who want somebody else to do it for them. So I would tell you, we see call after call in our call center with individuals asking give me some information on investments. And at the end of the day, some of them say, well, so how should I invest? And so I think it is more of a question about where is that individual, where do they sit on that knowledge base? So education becomes continuously such an important part of all of this.
So in continuing with the education thread, 16% of women felt very knowledgeable, while 31% of men report being very knowledgeable about investing. And Angie, I know that you have an interesting way to educate clients about investing and diversification. Would you mind sharing that?
Sure. So what I found is when we talk about diversification, a lot of times clients will say, yeah, I'm diversified because I have my money spread out in many different places. I have many different custodians that are holding them, my 401k plan, the bank, all over the place. And what I explain to them is that that's not diversification. That's just spreading your money out. So we need to look at what diversification really is. What does that mean in asset allocation? So what I did one year was I brought my women clients together, and I said, what we're going to do today is we're going to learn about asset allocation and diversification. And we did this by building flower bouquets. So I had them do their risk tolerance. They came out, let's say, moderately aggressive. And every flower that I chose had some component, whether it was a fixed income, whether it was an equity, whether it was a cash holding. And so based on the risk tolerance and percentage that they should have in asset allocation, they would build their flower bouquet. What happened was they were able to see that everyone in the room basically had a different kind of flower setting. So it just goes to show them that not everyone is going to be the same. It's okay that you're different, but look at how just by changing a few things around in your flower bouquet, it changed the whole view of your bouquet. And so women, it resonated with women because, they walked away understanding a little bit more about asset allocation, and they had a beautiful flower bouquet on top of it. So to remind them.
That's a great way to drive that point home. Sandy, how does OneAmerica communicate to your stakeholders the importance of diversification or asset allocation?
Yeah, so if you go back to the one check online that I mentioned earlier, it is one of the factors in terms of how can I utilize the change in asset allocation to be able to meet my retirement goal. And so one of the components is understanding, again, to Angie's point, what is the change? What is that change in diversification equal to? Does it prepare me more to retire earlier? Does it help me to meet my target? And so we would continue to go through that process of interactive coaching and counseling. And again, we could start with online tools, but also have a face-to-face. And so that would be targeted and focused on the topic of investment allocation. I go back also to do it yourself or have you do it for me. The use of managed account portfolios is pretty significant in this business, where, to Angie's point about a risk tolerance questionnaire, an individual will go out and fill out where do they sit on that spectrum based on a number of questions that have been designed to come up with a conclusion. And from that, individuals will be placed into one of the managed account solutions. So somebody else is really doing it for them and helping them to guide through the diversification without being extremely educated on the topic. So I would say those have been really beneficial. And there is a movement towards personalized, because today those managed account portfolios are much more about age-based, and the personalized retirement asset allocation portfolios will be professionally managed and rebalanced, but on a time horizon that will be personally identified. So I think that's going to be very helpful because, again, going back to, do you want to do it and do you want to be educated that deeply, or do you want somebody else who you trust to help you through that process?
Right. That's a good point.
Mm.
So I'm going to go back to the study now and results of the study. The study reported that men own life insurance more than women. That may not be surprising given society, but I wanted to know if that rings true for you within your firms. Angie, do you want to start first? Do you find that women don't hold insurance as much as men? Is that a gap?
There is a gap there. And it's interesting because if we look back in time, we actually set that up for them. I think of it from this perspective. A couple comes in, they sit down at the table, right? And we're talking about the fact that the primary breadwinner tends to be the man. Now, again, we're going back in time, so we're not talking about today. So we say to this couple, because men tend to live shorter lifespans than women, we need to make sure that you, the female spouse, is covered should your husband pass away. So let's make sure they've got life insurance. You, mom, on the other hand, are the caretaker of your children. And although that's very important, it's not as important as the income that comes in from your breadwinner spouse. So we're going to give you some life insurance because in case you die, we need to make sure that your spouse, your husband, has the money to hire a nanny or take care of the children in some way, shape, or form. So there we are. We have level set for them that women don't need as much as insurance as men, right? So let's fast forward to today. That's not true. Women have come to the table, and for many, if we look at just the research that's out there, are the primary breadwinners of a lot of families, just, by percentage. So we've already put them at a disadvantage if they started way back when. So we now have to bring them forward and explain to them all about life insurance, asset protection, risk management, and those conversations in order for them to understand the why of it. Because if they look back on their mom didn't have a lot of life insurance, right? Historically, they're trying to figure out why that is, what happened that all of a sudden I need to have it, more than just that I'm maybe the primary breadwinner. So yeah, it's a conversation that we have to have. And again, it goes back to figuring out where they are. And that whole piece that Sandy talked about literacy and education really comes to the forefront when we look at life insurance in all the things that we have. So we have to make sure that when we're having this conversation, whether it's with a single woman by design or circumstance, or a couple, that we are making sure that they understand that asset protection comes in many different ways to make sure that they meet their life goals in many different ways, right? Now, for example, I had a conversation just last night with a couple where the wife said to me, well, we don't need insurance anymore because our children are grown out of the house. And I had to go back to them and say, okay, well, his life insurance now really is a source of income for you, should he pass away. And your life insurance is a source of income for him, because at the end of the day, when one of you pass away, just from a basic perspective, you are now in the highest tax bracket as a single person. They were
That's
like,
a really good point.
mm-hmm. Yeah, didn't think of it that way, didn't look at it that way, weren't looking at it all. So sometimes we have to bring around the life cycle of life insurance, right, and asset protection and how it works for them.
Right, right. And we've been talking about a lot of the research that says that women are more educated, more employed, owning more real estate, living longer. So all of that resonates with everything that I've been reading. Sandy, where do you come in on the life insurance for women conversation?
Yes. So again, working with retirement plan providers, the way we look at it is really holistically, right, in terms of financial wellness, because there are lots of component parts that equal financial wellness, and you've got to make choices along the journey. And so what I think about when I think about life insurance is something pretty new to plan sponsors when they're looking at building out a retirement program. It's always been focused on accumulation historically. And I would say most recently, which is a really good thing, we're looking at not only accumulation, but it's protection and decumulation. So Angie, you talk about the protection aspect of it. It's so critical, right? And I know we're going to get on to the long-term care. That's another protection policy. So as we are building through our workplace solutions offering the capability to model, we're looking not only at accumulation, but where should you put your money from a life insurance perspective, protection again, and then decumulating. So I think the holistic strategy is really how we're looking at it more specifically.
Yeah, I like that. I like the holistic perspective. So I'm going to jump now to income for retirement. And the study identified a big gap in that 4 in 5 or 82% of women claim to have a plan for where their retirement income will come from, but only 1 in 3 actually do. So only 33% to the 82% who claim they have a plan for where the income for their retirement will come from. So we talk about the fact that we have to meet women where they are, and they're different based on age and race and gender and cultural background. How do you broach this subject, knowing that one size doesn't fit all with women, whether they're part of a couple or they're single? So whoever wants to start on that one.
So I would say first, we have to find out, and I think it was a little unclear to me, even in reading the research, if we were talking about what they defined as guaranteed income, right? What was their plan? And I will say that most of the women that I talk to will say that, yeah, they have a plan for where that income is going to come from. It's called Social Security, right? That's my plan. I've got my 401k and I have Social Security. So that's my plan. That's how I'm going to take it, right? So yeah, they all come in thinking that that's their plan. But at the end of the day, coming from a holistic perspective, then we have to look at everything that entails. And so I will say to them, well, did you take into account taxation in there? Did you take into account longevity, how long you're going to live? Did you take into account the fact that you may need extended care? Did you, and we go through this, did you take into account conversation? And they go, oh no, I didn't take, I'm going to get Social Security and I've got my 401k and there's my plan. And it's, that's how I'm going to take my money out. So again, the conversation comes back to making sure that when we sit down with the clients and we talk about what's your plan, we have them define what they think their plan is so that we can help them walk through all of the pieces and parts that go into a holistic plan. To Sandy's point, right, is that if we're looking at the avatars or the personas that she builds, from OneAmerica, right, that helps them look at where they fit. So that's a great jumping off point to say, well, look at all of the motivations, look at the solutions, look at the problems, and then say, so based on this, kind of what's your plan? So I think that when we're talking to them, again, it comes down to, do we know exactly how they are defining what that is? Because if we don't, then we can start off someplace else and totally miss the boat on having a conversation, an in-depth personal conversation to them.
So Sandy, I know your model is a little bit different, but is there a way that you help your stakeholders bridge that gap?
Well, again, I'll go back and this planning part of it is pretty critical, right? So as I said up front, this one check online that we have is an integrated model, and it speaks to exactly what Angie was talking about, which is helping along the way educate on what are all of the components that you need to really think about as you prepare. And so as you guide yourself through that, whether it is, again, you can do it in person, it's not only accessible online, but as you go through it, it helps you to understand what are all of those pieces. And Social Security isn't the only piece, right? It's all the assets you earmark for retirement, but it's also the levers. If I increase the age when I'm going to access Social Security, what's the impact? So there's the what if scenarios in the model that I think help people to understand what kinds of decisions. That's the action plan. If I put more money in, how do I budget? How do I save to put more money in? How do I think about my legacy? Do I want to leave as much as I had thought I could leave? So there's a lot of what if scenarios that I think help you to go through the process to help you figure out how you can bridge it, because the model itself will calculate what's the expected probability of you being able to achieve that goal.
Jump in here for just a second, Hilary, and add one other thing when we're talking about this, because I think what Sandy said was really important, talking about the fact that we have to also look at deaccumulation, right? So everybody focuses their whole life on accumulation. And I always say to clients, okay, that's us getting you to the top of the mountain, right? And retirement is you plant that flag that says, I made it, I'm ready to go into retirement. And then you jump off the mountain because you don't have a plan to deaccumulate. So it is incumbent upon us, if we've helped you get up to the top of the mountain, it is also important that we help you get down the mountain in a smart way. And that deaccumulation plan becomes very important because it takes into account all of the things that we're talking about here and all of the risks that we as advisors know that are out there: longevity, sequence of return, taxation, inflation. All of those things get planned in there that clients never think about. That's our role. That's our role to help them, whether they're coming to an advisor for one thing. At the end of the day, we have to think about it holistically for all things.
Well, that's a nice segue to the next area of the study, which was all about guaranteed life income. And women are typically more worried about running out of money in retirement. They're also more likely to worry about some of the external forces like inflation or Social Security cuts. But neither men nor women, despite the fact that women worried more, neither of them really demonstrated a high level of knowledge about the strategies and the products designed to maintain those assets. And so certainly plan design is important. There are features that can address longevity, so you have some dials there. And there are some legislative changes like the Secure Act that can impact women. And some advisors, we talked about in our prep session, how some advisors work with both plan sponsors as well as with individuals. So there are some elements that we can talk about regarding strategies for income, such as guaranteed life income. How do those conversations get started?
Again, you point to some of the legislation, and again, working with sponsors, the accumulation had been such a significant portion of where they would focus. I think over time, if I think back to the Pension Protection Act in 2006, I know that's a long time ago, but it set the stage, right? So that the employer was more apt to feel comfortable auto-enrolling individuals. So again, that's not something that an individual has to make a decision of unless they want to opt out. So that, three things in the Pension Protection Act, I think, that set the stage for accumulation to be much more robust than it had been in the past. One was the auto features. The other was what I talked about, which was the QDIA, which is the Qualified Default Investment Alternative. So again, it goes back to the question you had previously, Hilary, on investment knowledge. Well, you don't need a lot of investment knowledge if you're going into a default option where a sponsor has selected the investments. So that was one. And then the third I think about is the ability to offer financial planning. And that was something that had not happened previously. So you fast forward to the Secure Act, which was signed into law in December of 2019. And what, again, has happened is we've taken accumulation and added lifetime income. So it's given the sponsor more comfort because they now can have access to selecting a provider for a lifetime income option, where previously it had not been a comfortable place for sponsors because they felt that there was too much fiduciary liability. So with the law being enacted, lifetime income becomes something that is a real thing. And as part of that, the portability, so similar to the defined contribution plan, where portability was something that was highly desired for talent pools, portability is something that's been more defined. And then third within the legislation is mandated that each year on a minimum basis, the sponsor has to provide the individual with income projections, monthly income projections in retirement. So that's, again, education, more information, and they can decide whether or not they feel comfortable with what that projection states. So I think we've come a long way from, where I sit in the role that I play in terms of helping individuals through the sponsor access real retirement vehicles that get to deaccumulation more specifically through the Act.
I'm thinking about your down the mountain analogy. I wanted to know if there was any, I'm stuck on that right now. So is there anything else that you can add to the conversation on the downside of the mountain?
Yeah, so when we're talking about that deaccumulation strategy or coming down the mountain, we have to pay attention to the fact that everybody's life changes going forward in retirement. So it is not a straight line in retirement. It wasn't a straight line during accumulation. It's definitely not a straight line during deaccumulation. And so how does that affect what it is you're going to do and where that money comes from? And so many clients will come in and they still have this 4% withdrawal rate stuck in their brain because that's what they know, that's what they've heard, that's what they've read about, right? And having them have a conversation about, yeah, okay, so let's talk about what that really means. And then let's look at it from the standard of your life going forward, right? And if you are a person who wants to live the exact same life you did the day before you retired, then you're not going to be in a lower tax bracket. You're going to be in the same tax bracket if we're not careful about where that money comes from, right? So that has to make them see through a different lens. Our job is to help them see through a different lens. And that coming down the mountain piece is very important. I use that analogy all the time because they don't see it from any other perspective than I'm not working anymore, so therefore I'm making less money, so therefore my taxes are not going to be an issue. And at the end of the day, I said, well, okay, so your bills stopped the day that you retired. You don't have any bills anymore. You said, oh, you're in retirement. Awesome. We're going to give you a present and you're not going to have any bills. They go, no, Angie, that's not what's happening. And I go, exactly. So you're really going to be in the exact same position that you were the day that you stopped working to the day that you started retirement. So what does that look like? And how do we get the money stream going? How does deaccumulation work in all of those aspects coming from a holistic perspective?
Well, I'm sure your clients are happy to have you to be their Sherpa down the mountain and bring up these issues that, seem very plausible from a consumer layperson perspective until you actually drill down on them. So I like those analogies. So similarly, I'm not going to quote all of the statistics exactly, but in keeping with the themes of the study, most people have high level of concern around the cost of healthcare in retirement. People are worried about how they're going to pay for long-term expenses. Some people scored well on whether Medicaid paid or didn't. Some people, women knew more often than men did. But the bottom line is that men and women believe that they'll need long-term care in the future, but only 27% of women actually have a plan to fund long-term health care. So, and I know that it can be a sensitive topic, talking about the fact that, we're going to fail at some point and we may need long-term health care. So how do we have that sensitive conversation with clients to make sure that they have the right amount of savings allocated to it?
I think that we have to work on the terminology that we use. That's the first step. Because people think of long-term care and they immediately think that they have to be old in order to have, to use it. So I'm going to be 80 or 90. So that pushes them out. So now I have time because I'm 55 or 65 and I don't need it till I'm 90. So I think we need to change the lens at which we're looking for the solution. And so I don't use long-term care, I use extended care. What's your extended care plan going forward? That's today. What's your extended care plan going forward? Is it your children? So if something happens to you, are your children going to take care of you? I tell them, I have 2 boys. They're wonderful. I love them to death. But honestly, I really don't want them taking care of me if I needed, extended care. I mean, they would try their darndest, but I just don't really see them, bathing me, taking me to the bathroom. I mean, they would do it, but I just don't want them to do it. So having that frank conversation sometimes, this is one of those times when I think as advisors and planners, we have to have a fierce conversation. We just need to lay it out there, because if we try and massage it and we try to make it, not as dire, then to them, it's not important, because if it was, you would bring it up, right? And if you're not talking about it, then it's not important. So therefore, I don't have to think about it. And again, I think, hey, I'm from Alaska. Do you know what my clients tell me? They're just going to go out into the woods. They're just going to go out to the woods and die in the woods, and their family doesn't have to worry about it. And this is Alaska, so I believe them. I mean, they were just woods. So, I say, well, that's just a wonderful thought, but let's not go there. Let's really talk about how that's going to affect your family, right? What does that look like? So I think sometimes having that fierce conversation, and maybe not talking about it from a long-term care, but extended care, and what does extended care mean? Because that's your whole entire lifetime talking about extended care.
I like the fact that you highlight the terminology that we use from the industry perspective, and how that either does or doesn't resonate with your clients when you're talking to them. So, Sandy, have you taken into account the long-term care aspect in your personas? Do you have personas?
Yeah, we're just actually, good question, Hilary. We're just starting to do that through this workplace solution effort and building it into the personas. So you would see, a similar persona to meet Jessica that might identify at a certain point in a life event that you should begin to consider it. But I like Angie's notion of make it simple, right? Make it understandable, relate it to their knowledge, but also where they're experiencing life. And I would say, again, this ties into that holistic plan, but it ties in at that protection level, which is really so important. And we're beginning to educate. That's where we are right now, is beginning to educate and have people feel comfortable and confident with the topic. We're seeing actually an increased demand for information as we see longevity increasing and we see the expense factor increasing. We heard lots of requests coming out of COVID where people were more exposed, right, to the nursing home situations and that type of thing. And, we look at the statistics as you do on a regular basis, and the statistics are there to support, men and women. I think I saw a statistic here recently, that are turning 65 today. It's close to 70% that it's likely that they'll need long-term care, and that women will need care longer than men. So 3.7 years is the number I saw from the Health and Human Services Administration on Aging, versus 2.2 for men. So when you start to see those statistics out there, you start to think, well, it really is important. But again, it goes back to the plan. Everything goes back to a plan. How can you access the information, but also how can you fund it? Because that's a balancing act in itself.
Right. And it's one thing to worry about it. It's another thing to actually plan for it.
And I think that there's a component here too, where we as practitioners aren't even clear about all the different solutions that are out there for long-term care and extended care. So we have to educate ourselves too in order to have that conversation. Or we have to be able to say, that is not in my wheelhouse. Let me get you someone who understands how to navigate an extended care or long-term care plan. Again, because the industry is changing, everything is changing, the cost is changing. So if you're not well-versed in it, you aren't going to have that conversation, but that shouldn't stop you. It's okay to say, I don't know that area well enough to have this conversation, but let me get someone that will help you do that.
Yeah, Angela, you bring up a really good point, right? So again, it is in what's the data that you use to be able to identify the plan. So, and Hilary, you mentioned it's not even just about long-term care, it's what's my health expense going to look like. That's a discussion and a dialogue that's happening on a more increased basis in the industry. And the number that I saw recently was a couple has to have about 300,000 in assets today to cover their post healthcare expenses. So you factor all that in and you think, well, this all has to go into the planning process and part of the evaluation of what do you really need in retirement.
Exactly.
Well, it's daunting, but I'm glad we have experts like each of you and your colleagues at your respective firms to help us navigate these decisions and conversations. So now, because it's about 10 minutes to the hour, I'm going to just recap high level the findings. There were some questions in the chat on the quiz. Somebody asked what the failure rate was. So 72% of men failed the quiz and 89% of women, which was kind of what launched the idea for this webinar, that there's a gap in information and education. The good news is that women, most women do have a relationship with an advisor, and they do want to be educated, and they are open to being educated about their situation and their options, maybe a little bit more so than men. It's just we're okay with asking for directions if we're lost in a car before GPS. And so I'm just going to recap the high level study findings. So we just talked about the fact that women are generally receptive to receiving information and advice. And I think we reiterated that today on the call. There's a gap in terms of retirement funding. So women need to know how much they'll need in retirement, and only about a third do. So that's a huge opportunity for us in the industry to get to those women and help them get a firm plan. And then regarding investment, women are thought to be more conservative. And according to the results of the survey, they are a little bit more conservative than men, but conversations around diversification and asset protection, like Angie's flower arranging analogy, can help illustrate those concepts and make them understandable to folks and why they're important. And then lastly, we just talked about women needing long-term care more than men because of longevity. And having that discussion is really important. As hard as it is, talking about declining health is very, very difficult. So at this point, if we want to open it up and see if there are any specific questions that the audience has. From the start, fact-finding to finish, solution placement, timeline for completion. So I guess the question is around when we start these conversations to coming up with solutions, about how long does that take?
Well, from my perspective, I think, it's going to be dependent upon every client and where they're coming from. But, we look at it from the fact-finding position. So first and foremost, you've got to go through a comprehensive fact-finding to find out where the clients are. Once you've got that fact-finding, depending how complex their situation is, just going through and creating a holistic plan can take several weeks easily. So from beginning to end, and then we haven't even gotten to the point where we're talking about execution, right? So, most in my practice, I would say from beginning to end, just to get to recommendation is going to take about 30 days. Conservative.
Okay, that seems reasonable. Somebody said, not to mention the cost of childcare if a man has to hire someone. Great point about tax adjustment when a spouse dies. How do you handle the savings in a whole life?
So we're talking, I think, cash value. So I guess it depends on the type of whole life that you have out there. So again, we're talking about products, right? We've got non-participating whole life. We have participating whole life. We've got ones that give dividends. So again, we have to do some fact finding and find out exactly what kind of whole life or life insurance, whether it's an index universal life. I mean, all of those things that build cash value. How does it work? And then from that perspective, I mean, how can we use it to best help our clients? So is there a way that we can use the cash value in a positive way without necessarily negating their entire death benefit and protection aspect? So again, it goes back to product, making sure that you understand what it is that they're getting and how that cash value is being built and how you can use it. All
right, somebody wanted to get in touch with Sandy. Sorry, the chat is kind of going crazy. I work in employer-sponsored retirement plan space, and I was wondering if we could get Sandy's email to contact after this webinar.
Yeah, absolutely. I'm happy to have a conversation.
Okay, somebody asked about, you quoted the $300,000 for healthcare costs. Can you just reference the study so somebody can?
Oh, absolutely. That was a study that was done by Fidelity. And it was exactly 295,000. So I just rounded up.
Okay. What are the key channels to get assistance for long-term care if you're not an expert?
I think the easiest place for you to go is you can actually go to the long-term care website and find someone who is certified long-term care specialist, a CTLC. and they can have that conversation. And there, I'm sure within your areas, there are people who are designated CLTCs who would gladly have a conversation with you, or a conversation with your clients. Is a great a great opportunity to build a bridge between your practice and a CLTC and provide the client the best possible solution.
And OneAmerica does have a long-term care option that's managed out of our individual life business. But there are other providers out there as well, but I'm happy, if needed, to provide a contact.
Okay, let's see. Distribution order on qualify and non-qualify and tax-free. Please provide an opinion on retirement.
So I come from the distribution perspective that we look at distribution channels, so that it's not necessarily that I'm going to deplete any account in any one order. It comes down to taxation. So what's the amount of money that we need? How can we best do that? And how can we best do that in a tax efficient way? So it may be the fact that we need to bring down what their their qualified retirement, their traditional IRA and 401k amounts are slowly, so we don't increase their taxation. But if we need to get to the total amount, maybe we need to look at some non-qualified amounts, maybe some Roth dollars, some tax-free, some cash. So that's the view from my practice.
All right, great. Everybody wants your emails, ladies. Lots of thank yous in here. What's your opinion of providing funds for long-term care through a life insurance policy versus a long-term care policy?
So I just had this conversation with a client last night. So there are some positive effects, and when we're looking at hybrid solutions in which we have, for instance, an index universal life product with a long-term care rider. So again, it goes back to where the client is coming from. That can create an incredible cost to the client because of the amount of life insurance that they need, and also at the age of which they're getting it, versus a pure long-term care plan. But then there are some challenges there too. So again, I provide both solutions to my clients. I walk them down both of those solutions. We look at what their intent is, right? And then we can go forward from there. There's not one right or wrong.
Well, I like the two approach solution. So we're right at the top of the hour, and I want to thank you both for joining us today, for sharing your insights, your expertise, your knowledge, your sense of humor. And Angie, I'm just glad that you said that your clients didn't say that they were going to go off on an iceberg. I think the woods was just a little less horrific for me to imagine. So thank you for that. Ladies, thank you so much for your time. With your permission, we're going to share your emails because it looks like you have a huge fan club after today's webinar. So thank you again for joining the American College of Financial Services.
Thanks for inviting us. Appreciate spending the time with the two of you.
Yes, me too. Thank you, Sandy. Thank you, Hilary. Thank you, everyone, for participating today.
Thank you.